First up, what we have Entero Healthcare. The company made its debut on the exchanges today. Stock listed at a minor discount to its issue price. To discuss the company's prospects post the listing, we have Prem Sethi, who's the promoter, whole-time director and CEO of the company. First of all, good morning, sir, and congratulations on making your debut onto the exchanges. Now that you're listed on the exchanges, we hope to get quite a few interesting numbers and important numbers from you. First up, sir, what was the debt of the company pre-issue? What will be the debt now? And what is the interest cost that you are paying as far as FY23 was concerned? And what will be the saving for FY24?
See, first of all, thank you very much for having me on your show. Good morning. And it's a proud feeling to actually have Entero Healthcare, one of the startup, started 5 years back, listed on the stock exchange. So it's a very proud feeling for all the Entorians. Now coming to your question about the debt. So we had almost 350 crores of debt on the company, net debt. Now we're planning to repay almost 140 plus of that, part of that debt, to be paid back now. And we're looking at, interest rate about 12% plus on few of the debt that we had raised. Because our business is working capital heavy, so we always need some kind of, debt for debt versus equity ratio. But now that we have almost 1,000 crore of equity in the company, we'll be significantly reducing the debt now.
All right. Hi, Mr. Sethi. Good morning. Nigel on this side. Give us a simple number. The debt earlier was what? You said around 400 crores, and you have repaid 140 crores. So it comes down to
350 crore was the debt, and we're going to repay about 145 crores now. Almost immediately we're going to repay.
So you save roughly around, going by 12%, you save around 17, 18 crores of interest costs.
Absolutely, yeah. Right.
Okay, lovely. If you could give us a few more details, sir, from here on, what is the growth trajectory that you're looking at, and what would be the steady state EBITDA margins?
See, ideally, what we're looking at is right now, see, for the last 3 years, if you look at the performance of Entero, we have been doing about 36% CAGR. Of that, about 20% was organic and about 16% was inorganic. Now, inorganic growth is always part of our strategy for entering into newer, smaller markets, getting to tier 2, tier 3 cities, acquiring smaller distributors and then growing them big. That's part of our growth plan. So now that we have enough capital with us, of course, we would try and beat the, the last 3 years CAGR that we have.
So one more question. Out of the total 1,000 crores that you've raised and that will come into the company, a little over 400 crores will be ready for you as far as ammunition is concerned for inorganic growth. So have you identified a few targets? We believe you have bolt-on acquisitions that is typically part of your strategy. So any of them that you've identified, any that you will close by the end of FY24?
There are almost 17 term sheets that we have already signed. That means in additional 14 cities where we have identified the target. As I was telling you that inorganic growth is part of our growth strategy. We have identified those targets, one, either to enter into new markets, two, to enter into new product segments, which gives higher margin than the normal pharmaceutical distribution margin, like a surgical, like a consumable, so those kind of product segment is what we are going to try and enter. So there are a lot of these, target opportunities which are ready, and as we'll follow the process and due process in terms of DD and other things, and we'll try and, include them part of Entero as soon as possible.
Interesting. So inorganic growth is something that you'll continue to look at. I missed that margin number, Mr. Sethi. What is the guidance in terms of margins from here on?
See, we are already, H1 of last year, we did almost around 3% EBITDA with about a 9% GP. Now, they're going to be certain, performance-linked, GP. We expect the GP to grow because the kind of product segments that we are entering into are inherently higher margin business, and and there are a lot of fixed costs that we have. So as soon as the revenue increases of the company, the fixed cost will not increase in the same proportion. So we expect the EBITDA margins to grow significantly.
To what level?
See, we cannot give you an exact number, but it's going to be higher than where we are currently.
Should we take it like maybe a 50, 100 basis points improvement every year?
That's what our aspiration would be. That's the kind of direction that we'll be looking at. Yeah.
So a couple of quick questions. Number one, you said that you've looked at quite a lot of term sheets. So typically we want to understand, the kind or the size of these deals that you would typically look at. And when you look at an acquisition, which is slightly of a smaller size compared to yourself, what kind of market share are you targeting? We understand currently, given that the sector is so unorganized, you enjoy a market share of close to 1%. So going forward with these acquisitions, what kind of market share can you target?
See, the way you have to look at this entire business in India, I'll just take maybe 15-20 seconds to talk about how the sector is currently organized. So there are almost 65,000 distributors in a country on the healthcare side. Now, there is hardly any market share that these guys have in the local market. Now, at a pan-India level, Entero might be having about 1.5% of market share, but you have to review Entero at a micro market level. At a Bangalore, we'll be closer to 20% market share. At a Gurgaon, we'll be having about 35% market share. At a Delhi, we might be having about 10% market share. So at a micro market level, wherever Entero is, because Entero is not present across India right now. We are in 37 cities, about 77 warehouses. So as and when we are increasing our presence, one is we are adding more number of dots across India, so that we are able to create those supply points or the warehousing in those areas. At the same time, we are trying to go deeper in the markets where we are already present. So we expect our at a pan-India level market share is going to improve significantly. At the same time, there will be certain micro markets in which we'll acquire more market share, and certain micro markets will open up for the first time. Till now, our strategy was, when we started Entero, it's you understand, it's just a 5-year-old company, right? So the strategy was first to get into bigger markets of the country, acquire certain share in those micro markets, and then expand to other smaller tier 1, tier 2, tier 3 cities of India.
All right, Mr. Sethi, we appreciate you joining in. The markets for the time being are a little bit nervous on the stock from the IPO price, but you've given us a good guidance on the path ahead, and we look forward to interacting with you as the time passes. Congratulations on the listing, and hoping to chat up with you rather soon.
Thank you. Absolutely.
Okay. All right. Well, time to slip into a short break. That's the Entero Healthcare Solutions Management. They are guiding for a strong top-line growth. They're saying margins as well could improve by around 50 to 100 basis points in the years to come. And they're also saying they continue to remain on the prowl with regard to inorganic growth. Debt has come down by nearly around 40% from what it was pre-listing.